Last week, I closed out the rest of my Tesla December calls. Year to date, we are up $607,000 on about $1.3 million, so a little bit over 50% in just the first 5 months. And Thursday, we closed out the rest of those December $350 2026 call options for a 24% profit or a $64,000 profit in total. And my goal in this video is to explain to you why I closed those call options out, what has to happen in order for me to get back into a position on Tesla. And more importantly, I want to spend some time to take a top-down look approach, starting with the monthly chart, looking at the weekly chart, and seeing what I think is going to happen for Tesla, not only for the next month or so, but going into the rest of 2025. And before we get into the video, if you want to learn my full step-by-step system completely for free, our 12-course masterclass series will be down in the description. Everything that I use, all of the tools, all of the indicators, everything about my strategy is over there for free. The only thing that I ask in return is that you take the courses in sequential order. You don't look to skip ahead and take bits and pieces, because if you don't have the full understanding of not only the system, but how to take losses, how to think in probabilities, then all of this information will not serve you, and you will become part of the 90% of traders and investors who fail. Let's start first by looking shorter term, starting with a daily chart. If we take a look at Tesla, you know that we've been playing this breakout here since April 24th. You can see that the daily BX turned green back on April 24th, where we got our first initial entry. Price pushed its way up, pulled back again, broke out, but the BX trender, which is this oscillator indicator at the bottom of your screen, essentially showing buy-sell pressure. When that flips red, it means short term on the daily chart that sellers are entering the market. And of course, it doesn't mean the stock has to crater. We saw the stock just continued to rally, and we were able to get right back in the very next day. So we would have made an 11.58% profit. Our requirements were met once again on May 9th, and then our requirements were no longer met here on May 23rd, when the BX trender once again turned red. So just in the past couple of weeks following this strategy, we would have been able to pull about a 28% return on shares alone. If we look at the bottom right side of your screen under the tabular data, you can see that if we would have followed our entry and exit requirements over the past 9 years, we would have made a 7,423% return on capital, which is amazing. We would have done this across 73 positions, and we would have only had a successful win rate of 55%. That is a little bit better than a coin toss. And this is why I try to explain to my students and to all of you guys here on YouTube and X that you should not be focusing on making money each and every single trade. Instead, you should be focusing on how much money you're making when you win and how much money you're losing when you inevitably lose. You can see here at the bottom, our average win, which means every time we're right, is an average return of 15.19%. Very, very strong. Our average loss for the other, basically 50% of the time that we would lose, is only 3.5%. So we are winning nearly 4.5 times more than we are losing. Now, I need you to truly understand that. If you want, sit down here with a coin. Let's pretend we have a 50-50 accuracy rating. Every time you hit heads, write down on a piece of paper that you would win $1,500. And every time you would lose $324. Now, what we don't want to do is focus on what the next win or what the next loss will be, because that doesn't matter. We know that we're not going to win every time. But what I want you to do instead is sit there and flip that coin 100 times. Of course, you're going to end up making a crap ton of money by the end of it. But more importantly, what I want you to see is the sequencing or the patterns of those wins and of those losses. There will be times that you will have 5, 6, 7 wins in a row. There will be times that you have 5, 6, 7 losses in a row. And that's why understanding and learning to think in probabilities like this and not focusing on what is happening in the next trade is significantly more important than winning a lot. Winning a lot feels good for the brain. It's comfortable. It's a nice little hit of dopamine. But we understand, much like in other aspects of life, that things that are comfortable kill us slowly and usually are not as effective as the hard stuff. Now, to further illustrate the realness of this, I want you to look at the returns in a line chart over the past 10 years. One thing that you're going to notice is that it's up and to the right, which is exactly what we want to see. But more importantly, I want you to notice that we would never catch the top to perfection. We would always end up giving profits back, sometimes over multiple weeks or multiple months. And this is where traders fail. They see that they were up a certain amount of money or a certain percentage, and they see this drawdown after that rally as giving money back. But I want you to understand that if you think that way, with all due respect, it is flawed. Because when you're trading a system, you didn't give the money back because it was never yours in the first place. It was simply the system playing its way out. So that brings us now to where we are currently seated. And I removed all of my bullish positions on Tesla because the daily BX is red. Worst case scenario here, price will reject off of $350, fill this gap at 310, and pull its way back to, worst case, this old support level at $290. That would be, worst case, a 15% move to the downside. From there, we would be looking to see the daily BX flip green once again, and I would look to go long off of that support level. The other thing is if we just do what we did back here in April and in May, where price consolidates for a couple of sessions as we have been doing right now, and instead breaks right through this $350 resistance and then shoots its way to fill this volume gap up to $400 from back here on February 4th. Now, from a risk versus reward standpoint, I want you to understand that we've already made 27% on shares, and in those options, we made about 28%. So I think worst case, if this were to gap up overnight and I don't get back into a position, I'm only missing out on 13.5%, and I've already made a massive profit. But if we play this out and things actually play out the way I think they're going to play out, which doesn't always happen, then we bake in on this pullback another 15% move to the upside. And after that 26% run, we could potentially get a 37% run over the next couple of weeks and months. Now let's zoom out to a bigger time frame, which is going to be the weekly. Even with this massive pullback, and we were getting a lot of hate back in January, February, and April for saying that structure was still bullish, but it is. You can see that even though we had about a 55% haircut, price action was still making higher lows and higher highs. If we take a Fibonacci retracement from that low at $186 up to that high at $441, and we pull this out, you can see that our smart money zone, which is the 0.786 to 0.826, or the area where institutions will normally step in, lined up to perfection. Now, I said earlier that you can take our free courses, and once you get to the third step, the Smart Money course is seated there. I highly recommend that you do not just skip to that, but you will learn how to draw these Smart Money zones on your own, and it's going to change your trading career forever. Now, these Smart Money zones usually hold about 70% of the time, but the problem is it's very rare that we actually pull back into them. This support was even further shown by the multiple retests on the daily chart before that rally. So looking at the daily, it seems like price action is consolidating a bit and we're going to wait for further confirmation. Looking at the weekly, it seems that we have bounced off of bullish market structure, and even better, if we look at the daily BX at the bottom, I should say the weekly, we are making higher highs, which shows expansion, much like what we saw in November and December. Now here is the bad part, but could change in a couple of days. If we zoom out to the monthly, while this market bias is green right now, it has not confirmed yet, meaning that the month of May has not closed its candle. So when we come up at the end of May, if this candle closes green, I will be 100% bullish once again. The fact that it closed red back in April was not the most ideal sign, but the reason I was still trading it is because of the smart money zone and this weekly BX trender showing a bottom. Overall, this is looking very good. And I think that as long as we can close the monthly like this, we could easily see Tesla at $500 to $600 by the middle of the summer, maybe the beginning of September. But for me personally, I'm going to stick to my strategy and my system and wait for the daily BX to flip. I've been doing this for 11 years and I'm not here to time everything to perfection because I understand that that is just unrealistic. And I know even just this year that while we can make $600,000 or nearly a 52% return, I only have to do that with a 56% win rate. Let me know what you guys think down in the description, especially with Robotaxi now happening in June and a potential new model coming in the first half of 2025. As always, guys, thank you for all of your support. Check out our free courses in the description. And if you want to join our private Discord community and trade this strategy with me and our students each and every single day, the link is in the description.